Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from Alan Wargent Property Buyers. I'm here with Chris Bates from the Alcove. Chris, how's it going?
Doing well, Pete. How's life over there? What have you been up to for the last week?
Getting my haircut today, as you can probably see on the video. So I've lost about half a kilo of head hair. I've got very thick hair. I've always had that issue. I suppose it's, I suppose you're getting to our age, you're happy to have any, I suppose. But that's what I've been up to today, since you ask. I'm heading over to Singapore in a week's time. Got a bit of time in Singapore on the way back to Australia. I've been on stopovers in Singapore in the last few months, but I haven't actually spent any time in Singapore for quite a few years. So I'm really looking forward to that. Got a few sort of Aussie expat friends over there I'm looking forward to catching up with. How about yourself? I think you were going camping when you left us last week.
Yeah, we are. Is it a haircut for you like the Olympics or the World Cup once every 4 years? Or, I mean, how often do you get a cut?
It's 6 monthly now. It's
wow.
It's full. It's the condition is so bad. It's kind of I think it might have to take the clippers to it at some point. But for now, anyway, it's once every 6 months with Rocco, my Italian hairdresser.
That's pretty efficient though. 2 times a year. So hats off there. But my business partner's actually in Singapore right now, and it's not really interests me to kind of make a holiday there, but I think it's just great with the family time, isn't it? I think there's so much to
easy.
do.
Yeah, like everything works. You get on the MRT and it just takes you to Marina Bay, and I think it's not really a holiday destination per se, but when you're flying from London to Australia, I mean, you've got a few options. You can fly to Perth direct, which is a very long way with kids, or you can take a few days in Dubai or Hong Kong or Singapore or Bangkok. So we try and mix it up a bit. So Singapore next cab off the rank. So it'll be interesting to see how it's all going over there. So I think they've picked up a little bit of the expat market from Hong Kong, which is less popular now. So but there's always plenty of Aussies around, so that's always good. And how about yourself?
Well, we did go camping in the end. I was trying to get out of it, in fairness, just because I was looking at the weather forecast, and we're just literally launching the rebrand at the moment. Everyone's coming back to the office. So it wasn't the best timing, but we booked it all the way back in October, and felt like we were letting our friends down by not going. So, but, serendipitously, I think there was a glamping. I've never done glamping before, but there was a glamping option at this campsite, and it seemed to be available. And we're like, oh, are we bad friends if we take that option and they're all camping? And we ended and so we were coming into the storm. I was like, right, we'll go, but we'll do this. And it could be a safe place for us all to go if it does hit. But we took the glamping option, got there, and then night one, a horrendous storm. That storm that you probably were over the news last week on Wednesday night in Sydney, the 100,000 lightning strikes or whatever it was. But they were all out in tents. We were in some 5-star, I'd almost live in one of those tents. Had a kitchen, a bathroom. It was amazing, to be honest. And we're nice and warm and cozy in that, and our friends are in these tents. Next morning I get up, I'm like, I've got to get them coffees. So I got up early, got some coffees for them, and by the time I came back with the coffees, they were all packing up to go home because their tent had flooded. So that was our camping experience. And then night 2, we just sat around a campfire with the kids, which was nice. So
glamping is one of those things, isn't it? It's camping light, but then I remember, when I was younger, I used to think I would never pay I'd never pay for a car wash. I'd never pay for a cleaner or someone to do the dry cleaning. But then as you get older, especially if you're an entrepreneur, you've got to at some point value your own time. And then it's kind of like, right, do what you do best and outsource the rest. And I think glamping can fit into that category if you've got kids, because when the weather sucks, it's not much fun putting those tents up and then putting them back, and then the mud, and then all of that stuff can be, if you're under a bit of time pressure at work, then it's pretty nice just to turn up and have it all working for you. I haven't done it for a long time. I did it once at what's the island near the Harbour Bridge there? Is it Cockatoo Island?
Yep.
Yeah, it's just a great place. And you turn up and everything's laid out. So, it's a holiday of convenience, I guess. But Yeah, I don't know. I've got some camping coming up over the European summer, so yeah, I do struggle with tents, I must admit.
Oh, it's the mud with the tent. The combination is a lot of work to get it back to nice and clean. You got to dry it out, and it's just a lot of work anyway. So I think we took the best option. But what's happening with work, Pete? I mean, it's really only just starting up for us now. I mean, we're definitely getting a lot of clients that are sort of keen to book in chats and sort of put their 2025 plans down and discuss them and do a few scenario analysis on, there's some people struggling. In fairness, I've got clients that have, leveraged up quite hard and they're struggling with cash flow, another year of higher interest rates. They're just trying to figure out how can they can afford. We've got clients who, maybe they, think now's a good time to upgrade. We've got clients that are, first home buyers that are coming back after years. And so, yeah, it's always an interesting time once people start getting back into work and start considering their property plans. But still a little bit early, to be honest, to give too much of a litmus test on the market and sentiment. I think we'll know a little bit more in the next couple of weeks. Just how much urgency there is with buyers. But yeah, there hasn't been any major shifts with interest rates, I would say, over the last week or anything that been majorly positive or negative. I don't know if you've seen anything.
Well, I think the acid test will be what happens to listings in February. It's always kind of quiet over December, and you get some of these sort of one-off readings, and people make a big deal of it, whether positive or negative. But I guess the test will be what happens over the next month and how many listings come onto the market, especially I think in Victoria, where I think there was a piece in the Fin this week that said 20,000 rentals have disappeared from the rental market in Victoria as investors sell up and first-time buyers come in. So yeah, there's that will be interesting. As you said, it's a bit too early in the year to tell because we've had clients doing all sorts of stuff. We had one client buy just really quickly in Brisbane. We've got other clients looking at commercial property in Central Coast and New South Wales. We've had other people come to us saying they want to buy Mornington or Perth, which we don't cover, but we can pass them on to people who do. So yeah, a bit of everything really, but loads of inquiries still for Southeast Queensland, and a lot of that is still home buyers as well as investors. So yeah, complete mixed bag so far. But I think in terms of market sentiment, it will very much depend on how many people decide to sell up in the new year. And I think Melbourne will be the interesting one to watch because all the sentiment has been pretty bad over the last 18 months. But I guess now from a value perspective, arguably the best value capital city there is.
Yeah, it kind of leads into one of our stories we're going to chat about today, Pete, around the rental market. And, there's been a lot of investors bailing on the Victorian market and not as many investors going there. They've been going to other places around the country like Perth and Adelaide, New South Wales, Queensland, rural locations. And Melbourne's been really the ugly duckling. And, that is also compounded because a lot of investors are bailing on it because they're saying, well, hang on a sec, the investment returns aren't here. And a lot of investors don't hold on long enough. They bail at the worst time, and often they buy at the wrong time as well. They come in too late to the party. So what was your take on that AFR article, Pete?
Yes, I mean, I suppose the interesting thing is that, I think there's always this debate about, look, if investors sell up, there'll be a shortage of rental housing and rents will go up. As we so often talk about on this podcast, it's never quite as easy as A plus B equals C. Or what was the old Pythagoras theorem? A squared plus B squared doesn't always equal C squared or whatever it was. That was a few years ago. But it's never quite as simple as a one-to-one correlation. And as it turned out, the rental market is actually pretty much eased off because there's other things going on at the same time. I think the rental market got very expensive in most parts of the country. I think the population has adapted quite a lot to that by, kids are staying home for longer. You can see share houses are being used again, which they weren't during the pandemic. Household sizes are increasing as people buddy up. So there's some factors pulling in the other direction. I think, though, there's definitely a short-term versus medium-term impact with this stuff. And I think in the short term, the rental market has softened a little bit. December is a pretty quiet time of year anyway, I think, for the standard resi rental market. But I think if it goes on for too long, you do end up with a situation where, especially in a country like Australia, where you've got big population growth, most new migrants go to Sydney and Melbourne, and most new arrivals rent initially. They don't have somewhere to move too as a home buyer. So I think in the short term, the rental market is a bit softer at the moment as people adjust to higher rents. But actually in the medium term, it could end up with there being a pretty chronic rental shortage. So yeah, it's one to sort of watch out for. Melbourne probably more than any other market will benefit from the build to rent sector. I think over half of that housing stock will probably go to Melbourne. It's probably the most amenable city to that for that sector. But yeah, I think just generally a lot of landlords have sold up. I think because of the land tax and various other sort of anti-landlord legislation, at least perceived to be.
Yeah, PIPA, so Property Investment Professionals Australia, I think that's what it is. I've done an annual market survey, which is interesting reading. I've sort of been tracking that over the years, and they've been sort of very outspoken, I guess, on the sort of issues with more investors leaving than more investors buying. There was a great stat in there where Ray White basically said that 30% of people selling are investors, but 20% of people buying are investors, and so it just shows that the reallocation of rental stock is happening, and why over 1 year it doesn't matter, but over 5 years, if a lot of investors bail in one area and then buy in another, you then go from potentially being oversupplied to undersupplied, and I think that's what's happening in Melbourne. I do think there's some rental price growth down there, and I don't know, I'm very positive on its prospects over the next few years, but yeah, and it's good buying right now as investors, I would say, compared to other places around the country. But should we crack on with our stories, Pete? What's number one?
Yes, let's do that. So first news story of the week. If you're not familiar, we do the 3 big news stories of the week on 2 cents every Sunday morning. So yeah, first story this week, just a little data series that came out from S&P Global. Mortgage arrears were down for the last month of figures. That's for November 2024, which is pretty surprising when you think about the trajectory of interest rates over the past 18 months or so. You would have thought arrears would have increased more than they have. And that was a decline in prime arrears, but also for non-conforming arrears. So the sort of what's usually the riskier types of lending, if you like. And I think, look, partly that's due to dilution because, as you said, there's been a lot of people coming into the market as well. So home loan balances are about 6% higher than they were a year earlier. But yeah, mortgage arrears actually fell to 1.6% for 30-day arrears. I think when you drill into it, the big driver for that has been a massive decline in arrears in Western Australia, which is booming, and Queensland as well. I think those 2 states previously, we had the resources downturn in Western Australia, which led to a lot of arrears 5 or 6 years ago. But also in Queensland, we had flooding, and that caused a lot of arrears for people who didn't have insurances. But those states have both seen a massive decline. I think the other interesting stat was that investor arrears were actually under 1%. So just incredibly low. I think because we've had very low rental vacancy rates, we've seen probably a 40% increase in rent since 2020. And also, yeah, full employment. Everyone who wants a job, by and large, has got one at the moment. So, yeah, as you said, some investors have struggled a bit and sold up in Victoria. But yeah, overall, households have held up surprisingly well. They've cut back on some discretionary expenditure, and we've seen that in the retail figures. Chris, the one question I wanted to ask you as the broking expert, certainly in 2024, particularly CBA made it much easier for borrowers to take hardship provisions if they were struggling. And I think towards the end of 2024, Westpac reported that maybe the sort of borrowers on hardship provisions, which is mostly residential property in Australia, fell from about, I think, 20,000 to 17 or something like that. So maybe it's starting to run off now. But I just wanted to tap in to your insights. I guess you're probably dealing mostly with higher quality borrowers, but what are people telling you? What are customers saying? Are they struggling with mortgage repayments? Has anyone taken a mortgage holiday? Anyone in arrears? Any insights?
I'd need to double check with the team how many have. From my understanding, we only have one that's actually had a payment holiday. But I haven't double checked in the last 6 months with them. Just is there anyone else that I don't know about? But it's very few. We're talking well over 1,000 clients, right? So, you do that as a percentage. It's very, very little. So I'm not actually across what all the banks are doing, but I think COVID taught me a lot of lessons around this. I thought the banks would be a lot harder as soon as there's, market sentiment's really poor, prices are going to fall. Well, they're going to sort of force people to sell. So, they can protect their loan books. But instead in COVID, they all did the opposite. They all acted as a collective to protect everyone's loan books. And I think in these situations, you can read commentary over the years and, like you said, CBA and, even when rates went up, they were out, they'd be speaking at forums and things like that, and they'd get asked questions around this, and they would say we would do things to support their borrowers. And what we've seen though is the borrowers that have leveraged up the hardest usually are the ones that have actually done the best financially over the last couple of years. And so the people who bought pre-2020, right, you've got to look at the price they paid and the mortgages they had. They weren't huge mortgages compared to the value of the houses, because they were pre this last boom, right? Particularly if you bought in 2018, 2019. So the people who've got the biggest debts, the people who leveraged up in 2020, 2021, maybe even early 2022, right? Now, the people who leveraged up the most were usually the ones who are the most confident financially. You take out a mortgage when you're confident on your short-term prospects with employment. And so the people who've got the biggest debts usually were the ones who are the most confident. Yes, people can be overconfident. And so we've absolutely seen that. People have been able to borrow 6-7 times their salaries. Their salaries haven't gone up. Work hasn't done anywhere near as good as they've thought, and they've had to downsize or they've had to sell. So I've absolutely seen that. But the ones that I was probably the most worried about coming into 22, 23 have actually come back and said, oh, yeah, well, I'm actually an owner in the business now, or actually, the business is doing really well, or actually I've taken a switch jobs and I got a huge bump because there's a shortage of whatever I do for work. And all my partner's back to work now, and the kids are coming out of childcare, and so our cash flow is getting better. And there's absolutely a lot of families where there's not much fun in their life. They're just knuckling down to pay the bills, basically, paying the mortgage and the school fees, and just the day-to-day living so expensive. And maybe they're negative cash flow, and maybe they're eating into savings, maybe they're leaning on family. So it doesn't mean that every dollar has to be accounted for from income. They can pull money from wherever you have to pay for mortgages, sell down shares, etc. So, yeah, I think that people are a lot more surprised. Now, if you are getting yourself into a poor situation with a mortgage, and the mortgage just feels too expensive because the price growth's been so big, a lot of people are saying, well, I can actually downsize and reduce my mortgage $1 million and get something that maybe is a 3-bed versus a 4-bed, or maybe it's in a different location that would still suit our family. And if they're bought well, then they can really afford to downsize. So we've absolutely seen that over the years, where even if they're not downsizing because they got older, they're just downsizing because they go, well, we just don't need a house this big and in size. And so, it doesn't surprise me. But this is the one that you always see whenever there's concerns around the market or property bears come in. They think the arrears are going to go through the roof. There's going to be all this forced selling. There's going to be all these listings on the market, and the market's going to crash. And time and time again, human behavior sort of takes over.
It has been interesting. I think the paradox is that we've got mortgage stress in some parts of the economy, which kind of makes sense given where mortgage rates have gone. But at the same time, mortgage buffers and prepayments are increasing. So there's obviously some households that are doing really well. I think as well, when you actually look at lending as well, that you would think, oh yes, investors are selling up. But even on a net basis, investor credit growth has been rising for 12 months now. So it's kind of a weird situation, a bit bifurcated, as I would say, in economics. And some households are finding it tough. I think some portfolio investors have tapped out maybe on one property just to take the pressure off, because they have seen some pretty solid gains over the last 3 or 4 years, and therefore why not, just take some risk off the table. But I don't want to jinx it, but at the moment anyway, things are holding up okay. And obviously unemployment could start to rise, and maybe if interest rates stick around higher for longer, that could sort of lead to some more forced selling. But at the moment anyway, arrears have held up well. And I think you're right, there has been, it seems to me anyway, been a landmark shift really over the past 15, 20 years. Banks are very reticent to go for forced selling these days. I think it's just too much effort. They don't get, they might end up with not cents on the dollar, but not getting the best price for the property anyway. And they'd just from a reputational standpoint, they'd rather not force people to sell if they don't have to. So, yeah, I think as you've often said on the podcast, if you think you are getting into mortgage stress, or you might do, try, be preemptive. You get on the front foot and talk to your lender as early as possible. Don't leave it to the last minute when it could become a big problem. So, yeah, I think, and it seems that most people have been doing that.
Yeah, absolutely. I think we'll have to obviously watch it, Pete, though, and I think keeping the unemployment rate low has obviously been a huge reason why it has stayed low as well. I mean, that kind of links into some of our other stories, Pete. Do you want to go on about the Trump factor? Story number 2?
Yeah. I mean, I guess that's been all over the media, hasn't it? You can't get away from it. Donald Trump and Elon Musk and who said this and who did that. I think it'd be interesting just to take a quick look at, well, firstly, what does the change of administration mean for the US? But then what does it mean for Australia? Well, I think for the US, look, probably less regulation, certainly cutting back on government spending, so more efficiencies and potentially more growth. I think the question that a lot of people are asking is, it looks like, if you look at the sort of inflation figures, I mean, core PCE inflation, which is one of the key measures the Fed looks at, it looks like it's pretty much under control. And therefore, Trump's got a bit of sort of wriggle room then to sort of go maybe potentially a bit harder on the tariffs. And that would be particularly targeted at China, but maybe also, who knows, Canada, the EU. And, could this potentially sort of ignite inflation again in 2025? I think, look, it could. I think what Trump is promising to do to try and counteract that is drill lots of oil and gas and sort of go harder on getting the oil price down, because, yes, it impacts the cost of filling up your car and petrol prices and so on, but also it filters through everything else in the economy, like production, and therefore into producer prices, and therefore into everything that you pay. I think, so, I mean, look, those are things that we don't yet know the outcome of. I just thought it was interesting, within the first 48 hours, that one of the executive orders demands that federal employees have to go back into the office 5 days per week with immediate effect. So I think something like 94% of government employees or federal employees were working either fully remotely or hybrid. So part-time at home and sometime in the office. Well, that's gone. Like in the stroke of a pen, now 100% are back in the office 100% of the time, or at least it seems. Now, Trump is a realtor, so maybe there's some vested interest there. But I think that's pretty interesting, because just in the past 2 or 3 weeks, there's been no end of Australian firms announcing similar measures. So I just wonder whether the tide is starting to turn there, and maybe the economy may be centralizing around the office again, at least 3 or 4 days a week, if not 5.
Yeah, I do think there's a trend there, Pete. And I'm just going to have to, I do like to ask clients when I am on the phone to it. It's one of those questions that sometimes catches them off guard. And, it's probably more for me, but it's also just to understand what flexibility they've got in terms of location. And, if you come in pre-COVID, if you go back to conversations that you would have with, city couples, cities, families, right? And predominantly, we'll be moving more and more from manufacturing to knowledge-based work, right? So more and more jobs are creating in the hubs of our capital cities. And you can see the investment we've made into our capital cities, the towers and the property boom in, Sydney, Melbourne, Brisbane's, enormous over the last 5 years. And the towers that have, got DA's approvals and are getting, it's a complete reshift into our capital cities, right? So I think there is a desire to, pre-then it was like desire to live as close as you can to the city, because you knew you had to get to the office and you wanted to limit the commute time. So you had more time to do things with family, before work and after work, and to make the whole thing work. And so I think we're sort of shifting back to that. I don't know how many days back to the office. I think the big move to the regions and the 1 or 2 hour commutes, has the desire to do that is lower, right? Because the confidence in terms of the remote work, but and people wanting to be back in the office as well, because they're wanting to be around people. They don't want to be at office at home all the time. But I do think we're going to get this affordability issue though, where people would love to live close to the city. They get pushed out, so they have to go to these 1-2 hours. But are they going to be commuting 4 or 5 days a week? And And what does that mean for our sort of public transport and the lifestyles that they're having to live? And so, yeah, I do think it's going to be it was never going to be a 5 days at home or 5 days at the office. It was always going to be this hybrid and different positions and different industries at different rates. But I do think that seesaw is moving more and more back to the office. And so, yeah, that's definitely a 2025 story I'm watching closely.
I think it's already happened to a certain degree. I think, being based on the Sunshine Coast, I mean, it's definitely the case. We're seeing properties that were listed, let's say 3.5 million and selling for 3 or less than 3. Now, yeah, it doesn't always, the listing price doesn't mean it's the market value and so on. But I think, also just for some context, prices went completely nuts during the pandemic. So it's not necessarily the right thing to benchmark against, but it's certainly the case. We've seen lots of instances of prices maybe 10 or 15% lower than they might have been a couple of years ago. I think as well, we're quite active around Central Coast and Newcastle, and that's the same dynamic, right? People rushed off to Terrigal during the pandemic and prices went sky high, but that's sort of calmed down a bit now as well. So I think, you do need to, if you're investing in those areas, you need to pick the eyes out of the market and make sure you get the right property at the right price. But sentiment is a lot cooler than it was, say, 18 or 24 months ago. And I think that's partly a reflection of what you talked about. I think, Sunshine Coast and Gold Coast have lost a few people back to Melbourne in particular, and also Sydney. And also, just more people needing to be closer to the office again. I think the phrase was COVID refugees at one stage, but that trend's kind of flipped a little bit now. So, I still think the coastal markets will always be popular, but it's just not the mad rush to the regions that we did see during the lockdowns and after that period.
Should we go into story number 3, Pete?
Yeah, so I guess the jobs market. So there's a few pieces out there. Stephen Hamilton in the Fin Review, Leith Van Onselen, Macro Business, and a few others. So I think when you look at the jobs growth in Australia, which has continued to surprise, really, another 56,000 last month, way above expectation. I think the public sector and non-market jobs have accounted for almost 90% of the jobs growth over the past year. So GDP growth in the economy has been very anemic. And all of that, to be frank, has also been public sector driven. And I think as well, Bill Shorten sort of made a parting shot this week on the NDIS and saying, look, 500,000 Aussie workers now earn income from the National Disability Insurance Scheme. So, that's obviously been another huge part of the economy. But I think, let's be frank, not all of that money is being well spent. And that's an understatement. I think there's numerous instances of, misappropriation and fraud and money just being wasted as well. So, like a lot of these things, they can start out with excellent intentions, but to some degree, that has degenerated into a bit of a racket at times. So, I think, what's it doing to the economy? The public sector is doing fine. It's been firing along, if you like. But the private sector is in recession, and there's definitely a bit of a crowding out factor. In the housing market, well, what's it doing? Lots of people are working on public infrastructure projects, like transport projects and rail and road and so on, but not so much in the housing market. The building activity figures out this week showed, housing starts, they're off the lows, but they're 43,000 a quarter. The government's looking for 60,000. Detached house construction is up in Perth and Adelaide and a little bit in southeast Queensland. And that's not so bad, but unit approvals are just dead. They're not even at 15,000. So I just don't see the government target being met. And look, a part of that responsibility does come back to the government because the big public sector spending has kept us out of recession, and that's good. It's kept unemployment extremely low in Western Australia, 3.3%. It's about 3.5% in Queensland and under 4% in New South Wales. So that's all good, but it's not really productive growth at this stage. And on the housing targets, we're just going nowhere.
Do you think, Pete, the obviously the election for the federal government isn't that far away? Do you think also the state government elections are always playing into with their spending as well? And I know in New South Wales, Chris Minns is doing a lot to sort of not increase wages and salaries. There's a psychologist, a psychiatrist. I think they've 200 or 300 resigned or something last week. And then they're going to rehire them back under contractors because it looks more off the wage bill. So, but they wouldn't give them a pay rise, even though they can get 3 times the money in the private sector. So, I mean, what's your thoughts on the elections? Also, potentially, do voters want to see the spending, or are voters actually wanting to see, governments be a bit more cautious? Well, it depends if they're not working in the public sector, do the private sector want the government to maybe just, pull the reins back in?
Oh, it is a concern. I mean, already there's pledges being made left, right, and centre, and here, there, and everywhere. And look, the Queensland election, it was like literally one announcement a day. It was like, we're going to promise this and that and something else. And
yeah,
and to be honest, that has been a part of the inflation story and the full employment story in Australia. I think that so it does tend to happen in election year, and I think it's already started. I think on the election results, they're just looking at the betting odds. Well, they just every passing week, it seems to be that things are drifting away from the incumbent government. Look, it's been a dreadful time to be an incumbent the last 2 years in particular. If you think about New Zealand, looks like Canada's going to get a change of regime. The Conservatives got booted out in London. So, look, it's a difficult time to be in power because I think the reason is central banks are saying that we've got inflation under control, which is kind of true at the headline level, maybe inflation back at, say, 2 or 3%. But what customers and in the retail economy and what everyday people are saying, consumers, is, well, hang on, prices are like 40, 50% higher in a lot of cases. If you go to a restaurant or if you, your energy bills are up and the cost of everyday living has just gone up. Rents are up 40%. So yes, inflation might have flattened out, but people are saying, the cost of living though is really painful. And that's what is punishing government. The electorates are really punishing that. So, but that's a real challenge for Labor. Normally in Australia with the 3-year electoral cycles, the government gets 2 goes at least. So it'd be pretty unusual to get booted out after 3 years. And yet, if you look at what the bookies are saying, well, that's now arguably more likely than not. So it's going to be a pretty interesting election, I think. And there'll be lots of spending promises around the housing market and everything else, I'm sure.
Yeah, and time will tell. Then what are you seeing, Pete, any on the ground that you think's interesting that you're noticing, in the Brisbane market in particular? It's just, I mean, when you look at the arrears rate, they're also the lowest. I mean, listings the tightest up there. I mean, is it going to kick on for another year up there, or do you feel like just everyone's budgets are just completely stretched and there's just no money left to keep pushing prices up?
I think, as Louis Christopher at SQM says, prices are never so high they can't go higher, and they're never so low they can't go lower. It's all about momentum, isn't it? I do think there's definitely less urgency at the moment. We did have one client just buy something immediately this week. But they were looking for somewhere they wanted to live. But I think certainly compared to where things were maybe a year or 2 ago, people aren't sort of rushing into the market in the same way. So I think it'll be more balanced for sure. But probably if you're a buyer in those markets, you do need to buy the right property at the right price and be a bit more circumspect rather than just tearing in, which was what was happening when listings were chronically tight. But I mean, we'll see how the new year opens up. Nothing's really got going yet. Usually takes until February.
Yeah, and I think I've already seen some articles coming out. Oh, listings are higher and they're higher than last year in the 5-year average. And I think when people realize is the 5-year average has been tight listings for the last 5 years. And so if you're slightly above what the 5-year average is, it's not like there's lots of properties on the market compared to, say, what was actually around 5 to 10 years ago. That there's a lot more properties transacting, and there's no major changes with stamp duty expected, and so borrowing capacity is still really tight. So people are stuck. It's still, I believe, the big freeze in properties. Besides investors bailing and maybe a few people transacting and getting out because of affordability, and naturally people dying and divorces and those sort of things turning property over. It hasn't got this sort of real momentum in terms of people just wanting to transact. And like you see in boom times, it's really low listings, I feel, for the next year or two.
There's also more people around. What's the population done over 10 years? Gone from 23.5 to 27.5 or something. It's like a 20% increase. So yes, you'd expect there
That's
to
true.
be more listing, frankly, because there's a bigger
But there's
population.
not.
Yeah, I mean, it's off the lows for sure, but at the moment, yeah, certainly quality stock is still pretty hard to come by. So yeah, it'll be pretty interesting to see how things open up over the next few weeks. So yeah, if got any questions, send them in. You can join us at the Rask Community Forum. That's community.rask.com.au with your property questions or actually anything to do with investing or ETFs or planning. They're all over there. So that's a free forum you can join. If you want to have a chat to Chris, where's the best place to get you these days?
Just in the
Chris?
show notes. That's always the best place, and that'll come through to the team. And yeah, we'd love to help. And yeah, and yourself, Pete, just reach out to Alan Morgent.
Yeah, if you're mapping out a strategy this year, always happy to have a chat. You can book in a call anytime. So yeah, any plans for the weekend, Chris?
No, I think it's a pretty quiet one. I might be wrong though. I never know these things till Friday night at 8 p.m. when I finally ask, what are we doing this weekend? But yeah,
Hopefully not glamping.
We'll find out at 8:01 Friday night. But good to chat, Pete. Look forward to chatting next week. Thanks for listening, everybody.
Cheers. Take care, everyone.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.